The feeder cattle market posted limit down losses in the futures on Wednesday of this past week. Traders at Brugler Marketing say it was a result of the large spec funds taking money off the table ahead of the June 20th cattle on feed report. The limit down surge in feeders also sent live cattle contracts lower at the Merc on Wednesday. As we record Thursday at midday, feeder cattle were back in the green. Extension Ag economist John Michael Riley provided a preview of the new on-feed numbers when I interviewed him one day ahead of the new report. John Michael, the pre-reports indicating any dramatic changes as far as the on-feed numbers?
Nothing dramatic. It's really just continuing with the trend that we've been seeing for the past number of months, a continual decline in the total inventories of cattle available, fewer cattle being placed on feed, and then overall, as a result of that, fewer cattle marketed. The marketing's number is probably the most, the widest range in terms of the pre-report guesses, largely due to the month of May that is the start of the grilling season. You've got Memorial Day in there, so there's a lot of uncertainty about how the total marketings during the month of May is going to shape up. So that's the one that we're least certain about, but everything's just a continual trend in terms of a total drop in supplies.
Is there anything in this report that could tell us whether herd expansion is underway, or is that something we'll have to wait on a little bit longer?
Well, this will be a quarterly report. We'll be able to see the breakout by class, so we'll know how many heifers were placed, and that's always a good indicator in terms of heifers being retained back. But I think just the general consensus as I visit with producers across the state and of a recent meeting with other extension specialists in the region, I do sense that there is a hope to expand, but the limitations are still there in terms of just capital requirements and whatnot.
All right, Wednesday this week we had a turn limit down as far as feeder cattle. That got a big headline. Is that just an anomaly? I know this morning as we record Thursday, things are kind of back in the green here.
It is. I think it's been called sell the expectation and then buy the fact. I think what happened is there was some money on the table, and we had some traders there that decided to take it off before the report, just in case the report didn't shake out like we're expecting. It is back up to where we started the day yesterday. So it's recovered most of those losses, but it is just a very volatile market that we're working in. We're up $10 per hundredweight just since the start of June for our feeder cattle contracts, and so that's a significant move just in a short period of time. And so this volatility is probably going to continue.